40% of Auckland's fixed-rate mortgages are repricing right now, between December 2025 and March 2026. That's hundreds of thousands of homeowners rolling off the low rates they locked in during 2021 and 2022 onto rates that are nearly double. The numbers are brutal. If you've got an $810,000 mortgage, roughly Auckland's average, and you locked in at 2.5% back in 2021, your monthly payment was around $3,000. When that fixed term expires and you refix at today's average rate of 5.4%, your new payment is $5,000 a month. That's an extra $2,000 per month, $24,000 a year, straight out of household budgets that were already stretched. I've been watching this repricing wave build for months, and the scale of it is staggering. According to RBNZ data, 2025 saw 81% of all fixed-rate mortgage borrowings refix, the highest proportion in 13 years. And we're not done. This December to March window is the peak. Families who've been insulated from rate rises for the past 3 years are suddenly facing payment shocks they didn't budget for. Here's what makes this particularly painful. Even though the Reserve Bank has cut the official cash rate from 5.5% down to 2.25%, 325 basis points of easing, mortgage rates haven't fallen anywhere near that much. The average mortgage yield in November 2025 was 5.17%, down from a peak of 6.39% in October 2024. That's improvement, sure, but if you're coming off a 2.5% fixed rate, you're still looking at more than double your old payment. And the burden is crushing people. According to the latest data, 34.4% of Auckland homeowners now say their income isn't enough to meet everyday needs. That's up from 31.5% just 2 years ago. Nearly 15% of homeowners are spending 40% or more of their gross income on housing. That's the threshold where you're one unexpected expense away from financial crisis. So if you're an Auckland homeowner and you felt like you're drowning even though interest rates are supposedly coming down, this is why. The repricing wave is hitting now, and the relief from OCR cuts isn't flowing through fast enough to offset the shock of moving from pandemic-era rates to today's reality. In this video, we're breaking down Auckland's mortgage burden crisis from 3 critical angles. First, the repricing wave. What 40% of mortgages rolling over between December and March actually means in dollar terms for real families. Second, why Reserve Bank rate cuts haven't translated to meaningful relief for most homeowners. And third, who's getting crushed the hardest and what options, if any, exist for families who can't afford the new payments. Let's get into it. Right, so let's start with the scale of this repricing crisis, because the numbers are eye-watering. According to Reserve Bank data, 40% of all fixed-rate mortgages are due to refix between December 2025 and March 2026. That's the single largest repricing window in over a decade. These are mortgages that were locked in during 2021 and early 2022, when rates were at historic lows. 2.5% to 3% in many cases. For Auckland specifically, the average mortgage size is roughly $810,000. Let's walk through what repricing means for that family. At a 2.5% fixed rate, your monthly payment on $810,000 is approximately $3,000. When you refix at 5.4%, the current average mortgage yield, your new monthly payment jumps to around $5,000. That's $2,000 more per month, $24,000 per year. And this isn't a one-time cost. This is your new reality for the next 2 to 5 years, depending on your fixed term. Now, some families saw this coming and budgeted for it. They knew their fixed term was ending, they knew rates had gone up. But even if you prepared, the size of the payment shock is brutal. Going from $3,000 to $5,000 a month means fundamentally restructuring your household budget. That's groceries, petrol, kids' activities, savings. Everything gets cut to make room for the mortgage. And for families who didn't prepare, or who couldn't prepare because they're already maxed out, this is a crisis. According to the latest household expenditure data, the average weekly mortgage payment has jumped from $605 in 2023 to $658 in 2024. That's an 8.7% increase. But that's an average across all mortgages. For those repricing from 2.5% to 5.4%, the increase is 60 to 70%. Here's another data point that brings this home. 14.8% of homeowners nationwide are now spending 40% or more of their gross income on housing. In Auckland, where incomes are higher, but so are mortgage sizes, that figure is likely worse. 40% of gross income is the severe housing cost burden threshold. At that level, you're financially vulnerable. Job loss, medical emergency, car breakdown, any unexpected expense can tip you into arrears. So the obvious question is, the Reserve Bank has slashed the OCR from 5.5% to 2.25%. That's 325 basis points of cuts. Why aren't mortgage payments falling? There are a few reasons, and understanding them is critical to understanding why so many Auckland families are still struggling. First, the OCR and mortgage rates don't move in lockstep. Banks set mortgage rates based on their funding costs, risk appetite, and competition. When the RBNZ cuts the OCR, it makes borrowing cheaper for banks, but they don't have to pass on the full benefit to customers, and they haven't. The average mortgage yield peaked at 6.39% in October 2024. By November 2025, it had fallen to 5.17%. That's a 122 basis point drop. But the OCR fell 325 basis points over the same period. Banks have passed through less than half the OCR cuts to mortgage holders. Where's the rest going? Bank margins. Second, the one-year fixed rate, which is what most Kiwis refix onto, is sitting around 4.49% as of late 2025. That's better than the 6% plus we saw at the peak, but it's still nearly double the 2.5% rates from 2021. So even if you're refixing today, you're facing a massive payment increase compared to what you were paying. Third, banks are competing with cashback offers rather than cutting rates. According to industry data, banks are offering 1.5% cashbacks to attract borrowers. That helps with upfront costs, but it doesn't reduce your monthly payment. You get a lump sum when you refix, which might cover a few months of the higher payments, but then you're still stuck with the higher rate. Fourth, the lag effect. Even when the RBNZ cuts rates, it takes time for that to flow through to new mortgage pricing. And more importantly, it only affects people refixing now. If you locked in a 2-year term at 6% in mid-2024, you're stuck with that until mid-2026. The OCR cuts don't help you at all until your fixed term expires. So for the 40% of Auckland mortgages repricing right now, the reality is this. You're moving from 2.5 to 3% onto 4.5 to 5.5%, and there's no avoiding that shock. The OCR cuts have taken the edge off. You might be refixing at 5% instead of 6%, but you're still facing a 60 to 80% increase in monthly payments. Let's talk about who's bearing the brunt of this mortgage burden crisis. It's not evenly distributed. Some Auckland homeowners are weathering this relatively well, others are getting absolutely crushed. The hardest hit are families who bought at or near the peak in late 2021 or early 2022. They paid top dollar. Auckland median was around $1.34 million, and they locked in large mortgages at low rates. Their home values have since fallen 20 to 23%, so they've lost equity. And now their mortgage payments are skyrocketing as they refix. Let's run a real example. A couple buys in January 2022 for $1.2 million. They put down 20%, $240,000. Their mortgage, $960,000. They lock in a 2-year fixed rate at 2.8%. Monthly payment, roughly $3,600. That fixed term expires in January 2024. They refix at 5.8%, the rate at that time. New monthly payment, $6,400. That's an extra $2,800 a month, or $33,600 a year. Now, fast forward to December 2025. They're refixing again. Rates have come down slightly. They can get 5.2%. New payment, $6,100. Still $2,500 more than their original payment. And remember, their home is now worth maybe $950,000 to $1 million. They've lost $200,000 plus in equity, and their payments have nearly doubled. For families earning Auckland's median household income of around $120,000 to $130,000, a $6,000 plus monthly mortgage payment is devastating. That's $72,000 a year. On $130,000 gross income, you're taking home maybe $95,000 after tax. $72,000 of that goes to the mortgage. You've got $23,000 left for everything else. Food, transport, power, rates, insurance, kids. It's not sustainable. According to the research data, 34.4% of homeowners now say their income isn't enough for everyday needs. That's up from 31.5% in 2023. The repricing wave is pushing more families into financial stress every month. And it's not just families at the median, even higher income households are struggling if they stretch to buy at the peak. Someone earning $180,000 might be able to afford a $1.5 million mortgage at 2.5%. But at 5.5%, that same mortgage becomes unaffordable. Monthly payments go from $5,500 to $10,000. Even on a high income, that's crushing. The other group getting hit hard: fixed income households and retirees who bought investment properties. They were relying on rental income to cover the mortgage. Rents have risen, but not enough to offset the mortgage payment increases. According to the data, average weekly rent in Auckland is $631, down nearly 10% in some areas by late 2025. If your mortgage payment jumped $2,000 a month, but your rent only went up $100 to $200 a month, you're hemorrhaging money. So what can Auckland families do if they're facing a mortgage payment they can't afford? The brutal truth is there's no easy escape for families caught in the repricing wave. The Reserve Bank has cut rates, and that's helped marginally. But if you're moving from 2.5% to 5%, no amount of OCR cuts is going to make that painless. Auckland's mortgage burden is crushing Kiwi families as 40% of fixed-rate mortgages refix between December 2025 and March 2026. Homeowners who locked in at 2.5 to 3% during 2021 to 2022 are facing payment shocks of $2,000 per month or more as they roll onto current rates of 4.5 to 5.5%. For an $810,000 mortgage, Auckland's average, that's jumping from $3,000 to $5,000 monthly. The Reserve Bank has cut the OCR 325 basis points from 5.5% to 2.25%. But banks have only passed through about a third of that to mortgage holders. Average mortgage yield is 5.17%, down from 6.39% at peak, but still double the pandemic-era rates most families budgeted for. Who's getting crushed? Families who bought at peak in 2021 to 2022, stretched borrowers earning median Auckland income of $120,000 to $130,000, and investors whose rental income hasn't kept pace with mortgage cost increases. 34.4% of homeowners say income isn't enough for everyday needs. 14.8% spend 40% plus of gross income on housing. Severe financial stress territory. Options are limited. Extend loan terms, more total interest, refinance, but might not qualify under tighter lending rules, sell at a loss, prices down 20 to 23%, go interest only temporarily, just delays the pain, or cut spending and ride it out. None are good solutions. Most families are just enduring. The repricing wave represents the single largest transfer of household income to mortgage payments in New Zealand's modern history. And it's happening right now in this December to March window. For hundreds of thousands of Auckland families, the dream of homeownership has become a financial nightmare. If this breakdown helped you understand what's happening to Auckland mortgage holders, hit the like and subscribe button and press the bell icon. We're tracking this crisis as it unfolds. Drop a comment if you're facing a mortgage refix. Share what your payment increase looks like. And if you found this valuable, share it with others who need to understand why so many Kiwi families are struggling despite falling interest rates. Auckland's mortgage burden isn't getting better fast enough. The repricing wave is here, and the pain is real. Thanks for watching. I'll see you in the next report.